Hello, everybody. Welcome back to my course on how to become a day trader, where I show you how to become a profitable day trader. Today, we're talking about market basics. So, let's get started. So, first, we're going to be talking about the history of day trading. So, during the mid 1880s, people didn't use technical analysis, they used something called fundamental analysis, something outside the market that influences the market, right? Let's just say news. Let's just say Apple just released a new phone. That's all they checked. Okay, this company released something new. It's probably gonna go up. That's all they checked. Or this company is doing very badly because this product is bad, right? This product isn't working properly, so it's probably gonna go down. That's how people back in the mid mid 80s, mid 1980s used to see the market. They didn't use technical analysis. Now, technical analysis is basically the past of the market, how the past of the market influences the future, right? So there's usually patterns in the market, right? We see these patterns and we assume, okay, since these patterns happen, they're probably most likely going to repeat again because everything in the market is a cycle. Everything repeats over and over and over again, right? That's how it works. Here are the theories that work. That doesn't mean that it works 100% of the time. Nothing in trading is guaranteed. But these theories help you understand what's going on in the market. There is the first touch rejection and exhaustion. Oh, sorry I spelled it twice, but yeah, exhaustion. There's accumulation and distribution. There's rule of time, which is the x-axis. There's trend breakout theory. There's valleys and peaks, trends. And there's fractal nature. These theories tend to help you understand what's going on in the market and influence where to buy and where to sell, or where to take profit or put your stop loss, right? So there are a few markets. There is the forex market, which basically the forex market is whenever we go to the airport, right? We bring money with us, and once we go to the next, let's just say to a different country, right? We exchange the money that we have to the country's money, right? Let's just say I'm in the US, right? And I go to Britain, right? I would change the US dollar to the British pound, right? That's how forex works. And basically the transaction that happens, there is a limited thing where we take profit from that. For every transaction we take profit. That's what trading does. Basically, we get a currency and we exchange it for another currency with the same value. But yeah, but some currencies have different types of value. Like the US dollar might be a few cents below the British pound, or the British pound might be a few cents higher than the US dollar. So that is forex. Now there's crypto, the digital coin. There's crypto. There's some of you guys remember Dogecoin, right? These things, these digital coins, basically you buy a digital coin, or there's like you buy something with crypto, and then the transaction basically is our profit. That's how it goes. That's what crypto is, or crypto trading. It's basically the virtual transactions. Then there's stocks. Now stocks, we all know what stocks are. They're basically companies, big name companies like Apple, Tesla, Amazon, Meta, Microsoft, Google. All of these companies, we could buy percentage of it, which is called shares, right? We buy shares, and from those shares, if the shares go up, then we make profit. If the shares go down, then we lose money. Basic, right? Basic investing, right? Then there is futures, which is resources, real life resources. That's not a digital coin, that's not currency, and that's not a company. These futures are commodities like oil, gold, silver. Now, before I continue, I want to tell you the difference between a trader or a day trader and an investor. Now, an investor tries to invest for more than a year, right? It holds a position for more than a year. While day traders, they hold it for less than a year. Now you might be saying, okay, why is this important? Well, we get taxed differently. Day traders get taxed more money than investors. And yes, it's unfair, but that's how it works. It's called short-term capital gains tax. We get taxed way more than investors. So whenever people tell you, "Oh, you're an investor," it's better to say I'm a trader to make them understand what the difference between them, because there's a big difference. I don't know how much investors get it taxed. I think it's like a bit like 20-30%. We get taxed 40. I'm from New York, so we get taxed like 40, like 42 um per year. But that's the difference between an investor and a trader. Then we have market sessions for forex. Now, market sessions could also be in crypto and other types of markets, but it's usually for forex. Now, what is market sessions? Now, market sessions is basically the best time for you to trade. Now, the London session is from 3 a.m. to 12 p.m. And here are the best pairs of forex to trade. The Asian session is 7 p.m. through 4 a.m. There is the best pairs of forex to trade for it. And the New York session, of course, which is 8 a.m. through 5 p.m. Now, why are these sessions important, right? Let's just say I'm in New York and I'm trading the USD and the Euro, right? Would it make sense for me to be trading in the Asian session, which is 7 p.m. through 4 a.m.? No, right? Because one, I'm not trading that currency. I'm not trading the yen, right? Or the Australian dollar. It doesn't make sense, right? One, the Asian session in other markets that are not the anything around the Asian session or anything that's linked to the Asian session will just be stale. It will just be nothing will happen, nothing major will happen in the market. If I'm in the USD and the Euro, right? And I'm trading in the London session, nothing is gonna happen. There's gonna be no breakout. It's basically gonna be stale. It's gonna be just a line going up, down, up, down, up, down. Nothing is gonna happen basically. Now, if I'm trading the USD and the Japan yen, now that's in the London session. Now that's different because if I'm in the US and I'm exchanging money in Japan, it will still make sense, right? It will still make sense. The USD is being exchanged with the yen. The yen in Japan, it could be daytime or it could be nighttime, right? It just goes in between. You're exchanging the yen and the USD, and it's making sense, right? Because the USD and the yen are linked together with the Asian session. But would it make sense for me to be trading in the London session? No, right? That's how it works. You pick a currency, right? And 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 when it's paired, you make it make sense. For me, I usually use the USD and the euro so I could cover the London session. And days where I don't trade for the whole day and I must stay up night, I use the USD and the Japan yen. That's how I do it. That's how I always do it for forex especially because you can't be wasting your time using USD and euro in the Asian session because it's not gonna make sense. Same thing if I'm using the euro and the Japan yen. It wouldn't make sense for me to be trading in a New York session. That's how it works. You pick two currencies that tie into the session that you're trading. That makes sense. I hope that makes sense for you. Now here are the market terms. There is a candle, which is a candlestick displayed in TradingView. We're going to be using TradingView. So let me show you how a candle looks like. So let's look at how a candle looks like. A candle looks like this. It's a body and a wick. This is a candle. This is one candle right here. So how do candles look like? So first, a candle has a body. This is a body. This part right here is a body. Then a candle has a wick. The line right here is the wick. So let's label this first. Let's label this body, then wick, then wick. Now, there are two types of wicks. There's the up wick and the down wick. Those are the two wicks there is. Now, there are two types of candles also. There is, of course, the different color of candles. There's the, what I like to call them, the up candles and the down candles. My up candles are green because I feel like the normal candles, the red and green candles, messes with your psychology in trading. Red means bad, green means good. Now, blue, yeah, I mean, blue can mean bad in a way, but blue is not as bad as red. When you trade with red, you feel like once the red is going down, you feel like it's bad. It's bad for the trade. Then we have shares slash units, which is basically the ownership of the company, like Apple or Bitcoin, right? How much shares you're getting. Let me show you how you how you buy slash sell shares in TradingView. Now we have units. Now units are these things right here. Here are your units. This is how much you basically bet in the market. Your shares, as I was saying, your shares. Here's your shares. There you could go from 1,000. Oh, sorry, I don't pay for the TradingView subscription, but you can go from 1,000. You you can go from one. You go to 0.1. Those are your shares, right? There's the buy share and the sell share. Here's the buy. Here's the sell share. And here I don't use the risk button because it's kind of complicated, but we have the take profit. Now, take profit basically means the moment it touches this line, it's going to hit my account, right? It's going to make my account. It's going basically you're gonna get the money that you're putting, that you basically put. Um, and there's the sell. There's, I mean, the stop loss. Now, stop loss means like when your move is failing and it hits a certain price, it's going to stop. Same thing with the take profit. The moment it hits something, it's going to stop. But this is when you're winning, right? Okay, let's do, for example, let's do one Bitcoin, right? You have one Bitcoin right here, right? So look, the moment it hits this, I take profit, right? That makes sense, right? I take the profit. The moment it hits this, I lose money, but my move is over. The move is over. Like, this is really good in financial management when you get into that unit because now if I'm losing, I know I'm not gonna go less than this. I know, like, the moment you realize you're not gonna go less than this, that's the moment be like, okay, fine, I might lose. I know this is 1,000, and I know this is like 1,000 right now because Bitcoin, of course. But let's make it more reasonable because I feel like it's gonna confuse you guys. So look, let's just say this right here, and yeah, okay, hold up, let's do this. Okay, it's gonna confuse you guys. That's why I am not doing it. Let's do this right here, right? Now let's go again. This, the moment it hits this, I'm out of the trade. I lose money. The moment it hits this, I'm out of the trade and I win money. The moment it hits this, I lose money. The moment it hits this, I win money. Take profit, stop loss. Understand? Then there's the wick, which is a part of a candle, which I already showed you what a candle looks like. And also the body, which is also part of a candle, which I already showed you how they look like. But the difference is that a body, right? A body is where it closed, and a wick is how high the trade went, right? But it's not how high it is, but it's how high it went or how low it went. A body just shows you where it stopped. Then there's levels. I accidentally forgot. I basically had a typo right here, but it's basically rays marked by previous candles in the market. It's from valleys and peaks mostly, which you probably don't know what that is, which I'll teach you in a different lesson. Well, the reason why I'm putting levels here is because I want you guys to understand how a level looks like, or how most levels look like. This right here is a level. This line right here is a level, right? Now this other line right here is another level. This is not how you identify levels because there's nothing here. But this is a level. Now let's put it into the market. Keep in mind, I'm not doing this right now correctly. It's not about perfection. It's about showing you how a level looks like. This right here is a level. This right here is a level, right? These are levels. Okay, that's how levels look like. They're basically straight rays. They're ray across infinity, right? That's what levels are. There's trends, which is basically marked by valleys and peaks again, but it's basically what the move is doing, or basically what's happening to the move. Now trends are, well, I'm going with through the basic definition of a trend, which is a pattern in the market. But I'm going with the basic trend. And most traders know this as the line trend. This is a trend. And it's continuing to going up, going down until it's about to break. This line right here is a trend. Now there's level trends as well, but I'm not going over that. I'm just showing you how they look like. Then there is a close when the candle runs out of time, basically. Let me show you how it looks like. Now, what is a close? Okay, let's go to the 1 minute right now. Okay, so a close is basically, you see this number right here that's counting down? The moment the number hits zero, it creates a new candle. Basically, it closes. The moment this closes, that's a close. The moment it hits zero, it's a close. This candle is done. Now there's a new candle formation, right? That's a close. Look, it closed. Now you gotta wait until the next candle, right? This green one right here is closed. It's not gonna go up, down anymore. There we go. See, that's a new candle. This candle already closed. It's never gonna go up, down again. It's closed. That's a close. The moment this hits zero, it's a close. Look, it's gonna hit it again. 2, 1, it closed. It's never gonna go up, down again. Then there's the time frame, which is what time you're currently trading at. The 1 minute, the 4 minute, the 1 hour, the 15 minute. Basically, how long it takes for a candle to form. That's a time frame. Let me show you how it looks like. Here are all the time frames there is. Now, time frames are what part of the market am I in? Am I in the monthly? All of these candles take a month to form. You see the close? It's 8 days. As if I go to the 1 minute, it only takes 1 minute for it to form. So the moment you're in let's just say the 1 hour time frame, it's only gonna take you 1 hour to form this candle right here, right? This makes sense, right? Okay, now if I'm the 4 hour, right? It takes 4 hours for it to form. It's not right here 4 hours because it's been forming for 4 hours, right? Same thing here. 5 minute. It's not 5 minute here because this is have it has already been forming, right? That makes sense. So these are time frames. These are very important. So whenever you wanna, let's just say you wanna do a quick trade, right? You go to the 1 minute time frame and you trade like that. Or let's just say you wanna make big profit. You go to the 4 hour or the 1 hour, right? That makes sense. Then there's price action, the movement of price in the market. Basically, the numbers in the side of trading view, or how much is valued. Let's just say Bitcoin is valued at 1,000, right? That 1,000 is price action right there. This is the terminology of trading. So you're gonna hear me say a wick. You're gonna hear me say a body. You're gonna hear me say a candle. You're gonna hear me say shares. You're gonna hear me especially say levels, trends, and the close. You're gonna hear me say all of this. This is the terminology that you have to know for trading. So here are the rules of charting. Now I'm gonna go very slowly here because there's a lot of information here. So let's start off from the top. Here are the time frames we're gonna use. We're not gonna use nothing else. We're not gonna use the 30-minute. We're not gonna use the 45-minute. We're using only these. Now you notice there are different colors here, right? Every time frame has a color. You pick the color that you want, right? Per time frame. It has to be different. I recommend you to use the same colors I use because let's just say you want to show me a trade and it's not gonna make sense for me. It's gonna take time for me to understand your time frame color. But here are the only time frames we're gonna use. We're gonna use the monthly. Write this down, please, because it's very important. The weekly, the daily, the 4 hour, the 1 hour, the 15-minute, the 5 minute, and I would say the 1 minute. I don't use the 1 minute that much unless I really, really, really have to know what the market is doing. But here are all the time frames and its colors. I recommend you use my colors again, but you guys could use your own. So here's something very important. We chart from the highest time frame to the lowest. And what do I mean by that? We always chart and put the levels, trends, everything, starting with the monthly, then we go to the weekly, then we go to the daily, then we go to the 4 hour, then 1 hour, 15, 5 minute, and 1 minute. We never trade this way. We never trade from the 1 minute to the 5 minute to the 15 to the 1 hour. Why? Because basically what you're telling me is you're basically time traveling because these are newer time frames, right? You can't go from a new time frame all the way to an old one, right? You gotta go from the old one because the old one tells us what happened in the move in the past, and these things are relevant all the way to the 1 minute, whereas the 1 minute cannot be relevant to the monthly, right? I hope that makes sense. Always chart from the highest time frame to the lowest. Remember that. Now here are the tools we're going to be using, which is the text tool. You guys could start it in TradingView. The text tool, the triangle tool, the ray, the horizontal ray, the rectangle tool, the cross. Well, I use the cross because I find it hard switching between. Let's just say I'm drawing with the brush, right? I find it hard switching it between to get so I can get the crosshair. Then there is the brush, which is for me to, or for you to label things. The short position, which helps you determine how much you're risking. The long position, which helps you also determine how much you're risking per trade. Then we're not using indicators. I already said this before in my other lesson. We're not using indicators. Whatever we do, we're not using it. Because indicators, once again, destroys your free will. It doesn't make you grow as a trader. Understand? It doesn't make you grow. It just makes you stay in the same place forever, relying on things that don't work. At least if you lose with my technical analysis, at least if you lose with my technical analysis, you're gonna learn. You're gonna see what works and what doesn't. And eventually you're gonna grow as a trader. Well, as if you use indicators, they're not gonna show you where you made the mistake. Also, very important, the less markings you have in your chart, the better. Do not mark every single level that is in the chart, because then you're gonna confuse yourself and nothing's gonna make sense. Always mark less. The moment it breaks through a level, delete the level. That's the best advice I could give you. Delete the level. Also, clear your charts every 3 trades, please. If you have a chart that's not cleared for every 3 trades, you're going to confuse yourself. You're gonna realize that some levels are relevant and some levels are not relevant. So please clear. Then we have the candle colors. Now the reason why I use blue and green is for psychology purposes. You see, the default setting for TradingView is always red and green. I can't remember. I believe it's red and green. I haven't used them in like such a long time, like 3 years. But red and green. Reason why I deleted red and changed it for blue was because red gives a bad feeling when it goes down. Let's just say you buy and then all of a sudden the redness goes down. It's like you have red candles all over, right? That right there messes with your psychology, right? Red always means bad. It's been in movies, it's been in shows. Red is always bad. That's why I changed it to blue. Blue doesn't mean bad. I mean, you could say it means like bad because it's gloomy and all that, like it's sad, blah blah blah. But blue is a better color than red, and green stays the same. You see, when you see a blue candle going down, you don't necessarily say, "Oh, it's bad." I mean, yeah, some of you may think, it's bad," but it's not. I recommend you use colors that are bright and colors that don't give you any negative emotion or even positive emotion. The more neutral it is, the better. But of course, don't make it the same. Don't make it the same color. It's not gonna make sense. Don't put them both as white. You can put them as white and black. Maybe that makes sense. But as I said, you choose the color, but make it not mess with your psychology. Also, that's the reason most of my channel is always blue and green, because those are the candles that I use. Okay, we're back at TradingView, and I'm gonna show you how you chart. So let's start out at the 1 hour. This is not. I'm not gonna make it correct. Well, I'm gonna make it correct. At least some of it. How do we trade? So remember, we use different colors for every time frame. Keep this in mind because you don't want other levels interfering with other levels. That's going to ruin your chart. Remember, we always trade from the highest time frame to the lowest time frame. If you trade from the 1 minute, is the 1 minute gonna be relevant? Okay, let's check. Let's check if the 1 minute is gonna be relevant. Okay, let's just say I'm actually make this correct. This is a level right here. This is correct. This is no wait. This is correct. This level right here is correct. Now let's go to the 1 hour. Does this make sense to you? Does this make sense to you? No, right? Okay, so now in the 15. Let's just say I'm in the 15. Now does this make sense to you, right? This makes sense, right? This makes sense. It's not interfering in anything. This could be read here. Now let's do the same thing. Go back to the 15. Here is another level. It's a correct level. Same thing, it makes sense. It's not interfering like this, right? Let's just say let's do this. This is a correct level, right? Now let's go to the 15. Does this make sense? No, it's in the middle of a wick. You can't put a level in the middle of a wick. You could only put a level in on top of a wick, right? You only put levels on top of wicks. So that doesn't make sense, right? No, right? Okay. So let me chart it for you guys. Give me a minute. So we start from the highest time frame to the lowest. Highest to lowest. Here are levels. You don't have to understand this right now. I'm just showing you how your thing should look like. Remember, different colors. Very important, different colors. And we're done. We can't trade anymore here. We could go to the 1 minute and chart, but I don't recommend you trading in the 1 minute. I'd never trade in the 1 minute. Way too vulnerable, I like to call it, because in the 1 minute, anything can happen, right? And it's complicated. Look at this. Look at this. I don't like trading in the 1 minute. Sometimes not even in the 5 minute. I usually trade 15, 1 hour, and 4 hour. That's for me though. If you want to trade in the 1 minute, go ahead. But this is how you chart from the highest, which for me is the monthly. I always chart from the monthly to the weekly, to the daily, to the 4 hour, to the 1 hour, to the 15, to the 5, to the 1. Always chart like this, always going this way. Because remember when I said about time, there is price action and there's time. Price action is the y-axis and time is the x-axis. Now, look, we could never go backwards in time, right? We could never go backwards. Do you see the chart? The chart's always going this way, not this way, right? So we can never go backwards. So why would you go backwards like this? It doesn't make sense. It's basically time traveling. Time always goes this way. So x-axis always goes this way. It always goes this way. That's why you gotta trade from the monthly to the weekly to the daily to the 4 hour. It always goes this way. That's time. And time is always respected. Because if you do not respect time, you're gonna be trading wrong. You're going to be charting wrong, and it's not gonna work. You're gonna lose money. Always chart from the highest time frame to the lowest. I can't stress this. Do not chart from here all the way to here. So thank you guys all so much for watching. I'll see you in the next video. Peace.